Hello viewers, welcome back. So this is part 19 of our series of session on Tally's Release 3 and we are covering the GST features related to TallyPrime. In this session, we will cover important aspect related to the ineligibility or reversal of input tax credit. There are various instances where the GST law and the GST rule specifies the scenarios or situations where the input tax credit, if availed, has to be reversed while filing the GSTR 3B return. So we will have couple of sessions where I will try and explain in a simple manner interpreting the requirement of the law so that we can understand. And you, if you have to reverse input tax credit based on these conditions or stipulations, you can use Tally's ITC reversal mechanism. And that is what we will be learning as to how are we going to reverse the input tax credit which we have already claimed and capture that in Tally for proper GST compliance. So let us go to Tally and explore one by one each of the input tax credit reversal that needs to be done and how Tally allows the users to take advantage of these reversal flags and then reverse the input tax credit that they have claimed so that they are compliant with GST requirement. We shall learn how we can use the stat adjustment transactions for GST compliance based on various instances where you have to capture this additional information for the same to be reported in the respective returns. When we go to voucher, and under voucher you have the journal voucher where you can pass all this reversal and various other adjustment entries through journal. Tally's GST features allows you to capture the data keeping in mind the values are going to capture in the respective tables of the return. So for you to capture those values in the respective tables, you have to identify the nature of adjustment that you're doing, where Tally provides you a flag. So how do we enable that flag? If you see here on the right hand side button bar, you have this button called stat adjustment. So click on stat adjustment and the type of adjustment will be GST since we have enabled GST. So we say GST here, and now Tally is asking you what is the nature of adjustment that you want to do. Once you select the nature of adjustment, I will walk you through this various nature of adjustment with the relevant use case. So once you select any particular nature of adjustment, let's say I'm just selecting decrease in tax liability, and now if you see there is an additional nature of adjustment which will have the nature of adjustment or the flags related to the major nature of adjustment, that is decrease in tax liability. So if you want to decrease your tax liability, these are the various adjustments that you have to identify and capture them so that the value gets captured automatically in the respective table. We will understand a use case where you can use this nature of adjustment. Let us take a case that you as a regular dealer, you are making some advance payment to another dealer where that nature of supply is falling under reverse charge mechanism, which means instead of the seller paying or charging GST and then paying GST, the buyer under RCM has to pay GST and then claim input tax credit. When you make a payment of advance under RCM supply, we have to discharge liability of GST to the extent of the advance amount. Let us say for some reason the advance amount that you have provided, probably the party is not able to supply and you want to now cancel the advance. Let us say in the month of April you have made an advance payment to the RCM supplier, and we will see how are we going to capture that entry. And once you make the advance payment, we have to use this stat journal to account for the liability on the advance amount. So that is going to be part A of our scenario. The part B of your scenario is going to be that for some reason the supplier is not able to supply the material, and now you are going to take back the advance. Now you have already paid GST on the advance amount that we have paid. Since now the supply is not going to happen, we have to reverse that advance and reduce the tax liability, which can be adjusted against our other liabilities. So this is what is the part B of this example. So how are we going to handle this? So that means there are three transactions which we are to understand. A, the advance payment transaction, how are we going to capture in Tally? B, once you have paid the advance amount, how are we going to account for the liability of GST on advance? C, if the advance is refunded, how are we going to reverse the GST liability? That is what we are going to see through this stat adjustment. So first let us make a advance payment entry. The first entry is going to be the payment entry. Now when you are making the payment, there is an option that you have to select to identify that this is an advance payment where GST liability is going to be applicable. So when you come to the payment voucher, you will see here there is this option called stat adjustment. So when you click on stat adjustment, you have these three options. Okay, number one, advance payment under reverse charge. So that is what we are going to first understand. So we are going to select advance payment under reverse charge, and now you will have the title here on top which says what is this nature of payment. So we are going to debit the receiver, our supplier. The supplier account is created here. He is from Karnataka and is a regular dealer. The moment you select the supplier ledger, okay, the party detail will get populated and you can just press Ctrl A, and this is very important. This is where you are going to mention what is the nature of advance that you are paying, and what is the amount of advance, and what is the GST liability on the advance amount. So we have selected transportation charges, which is the accounting ledger, and in case if you have stock item also, you can convert this to stock item selection, where you will see on the right hand side it says show stock items. So in this company, I have not created any stock item. So directly it is taken to the ledger. The nature of service that I am taking is the transportation charges, which falls under RCM. And the advance amount I am paying to this supplier is 1 lakh. So Tally will automatically calculate 18% on 1 lakh. Tally is back calculated the taxable value, and it is calculated the GST amount also. And we are selecting as advance 1 lakh, and the payment is made through the bank account. So we have now accounted for the advance payment. The next thing that we are going to do now is we have to now record the liability of that 9,000 and 9,000, and we should bring it in the written form so that we have to actually make the payment. So the next entry that we are going to pass is going to be a journal entry, and before you start capturing the relevant ledgers, you will come to the right hand side button bar and click on stat adjustment. It is towards GST, and we are selecting the nature of adjustment as increase in tax liability, because now we are going to increase our tax liability. Enter. And now on account of what nature of transaction we are increasing our tax liability, Tally is giving you all these flags are very, very critical, because by selecting the respective flag, the values are going to capture in the respective table. That is very important, which I had mentioned earlier. Now in this case, we are saying we have paid advance under reverse charge. That's the first option. So you select here. So you get this information so that we are very clear what is the nature of adjustment that we are doing. And now I have created one ledger called RCM advance. So basically in this case, I am showing you a scenario where you have made an advance payment in the month of April. You have to discharge this liability. Later on, once you get your material, then you are going to claim your input tax credit. Till such time, this 9,000 and 9,000, we will be putting it under any ledger you want to call, you can create under current asset. This is the amount which is eligible for me to deduct from my liability later on. So the amount is 18,000. Enter here, and we are going to now create this liability called CGST. It's going to ask you what is the rate, 9%, and what is the taxable value, 1 lakh. Similarly for SGST, it will automatically pick up, and then we have to now specify the GST detail, which again we have all this information. This is the party to whom we have paid the advance, and the GST related informations are captured here, and we save this. So now what we have done, we had paid the advance and accounted for the liability. So let us go to the GST 3B and then see the impact of this transaction. I'm going to click on go to, press 3, select GSTR 3B, and for the month of April, you will see here the tax on outward and reverse charge inward supply 3 lakh. Now, why is it 3 lakh? I have also captured one sale entry which we will see here. So 3 lakh is the taxable amount and the liability is 27,000 for CGST and SGST. So you can just drill down here. When you drill down here, you have these two separate lines. One, it says outward taxable supply other than zero rated, nil rated, which is 2 lakh. So when you enter here and further drill down, you will see the sale invoice. So in the month of April, this company is also raised a sales invoice for their business consultancy services, which is 2 lakh, and the tax amount is 18 plus 18. So that's how you will see that the liability is getting reflected in where GST are free. The next line item that we are seeing here, it says inward supplies applicable for reverse charges. Again, you can select this line item, that is table 3.1d, enter. You will now see that liability in the current period is you are paying tax on advance paid, which is on 1 lakh you are paying 9,000 and 9,000. Select tax on advance paid, enter, and now you will get the detail. It says liability booked on 1st April towards the advance payment made to the RCM supplier. The taxable value and the amount is there. Come back. So which means for the month of April, this company, let us assume there is no input tax credit. So the tax liability for this company is going to be 27 and 27,000. So let's say the company is made the payment of the tax liability. In the subsequent month, the supplier is not able to supply, and now we have to get the refund of the advance. And once we get the refund of the advance, we know that we have already discharged 18,000 rupees towards this advance payment. So in the month of May, when the refund of advance happens, we have to now again pass an adjustment entry to reduce from the tax liability for that month, since this has already been paid and there is no supply going to be affected. Let us make one sale entry for the month of March and then do the reversal, so that we will know that what is the liability and how we are able to reduce that liability by reversing this advance GST paid. So I can go here and then I go Control A. So this date is going to be 1st of May. Business consultancy services, we have billed for 3 lakhs and the respective tax gets auto calculated. I'm going to save this. So we have passed this entry, and now since the amount is getting reversed, we have to again pass a journal entry. So we go to journal entry, and now this is the entry I've already passed. So what you'll do, you will go to the journal entry, then click on the stat adjustment related to GST. In this case, you are now going to decrease the tax liability. In the earlier case, for the previous month, we had increased the tax liability, and in this case, we want to decrease the tax liability. The moment you select decrease the tax liability, there are various additional nature of adjustment. The first one is cancellation of advance payment under reverse charge. So this is what we want to do this. So you can click here and then select here. And now what we are going to do is, we had credited CGST and SGST ledger in the previous month, and we have made the payment, and we had taken that 18,000 rupees as our current asset. Now since we have to reverse this, that means we are going to decrease the tax liability arising for the month of May. So you're going to debit CGST ledger, again rate is specified, what is the taxable value, debit SGST, rate is specified, what is the taxable value, and now the RCM advance ledger which we had debited earlier is getting credited, and the balance becomes 0. Again provide GST detail, and this is with related to the party RCM supplier. This is important to capture. Save it. Now let us view the return. Now you will observe that we made a sale of 3 lakh, but whereas taxable amount it is showing only 2 lakh. Why this difference in the value? Select this line item and press enter. You will now observe 3 lakh is the outward supply that we have done. The tax collected is 27,000 for CGST and SGST separately. And now since we are reversing the GST paid on advance payment, since we are cancelling, it's a cancellation of the advance amount. So the 1 lakh is getting reduced. So by total, the net taxable value is 2 lakh. On taxable value of 2 lakh, 27,000 collected minus previously paid GST on advance will get reduced now, and the net amount that we are going to pay, the gross collection minus the reversal, the net amount will get displayed here. I hope you would have understood the reversal mechanism and the need for reversal of ITC, what we just now saw in this video, and we will cover various other scenarios where the law requires the dealer to reverse their input tax credit in the upcoming sessions. Thank you all very much for staying till the end. See you all in the next session. Thank you very much.